Good morning, everybody, and happy Thursday. It's December the 4th. I keep wanting to say it's September, but it is actually December already, and the year is quickly coming to an end, at least as far as the major business activities go. And we're seeing some of the M&A deals that we've been tracking kind of get postponed into the new year, and so things are certainly winding down slowly. It typically always takes until mid-December for things to really slow down, but we're slowly getting there. Now, that does not mean that there's not opportunity in the markets. In fact, that there might be a lot of opportunities, and that's what I'd like to touch on here today as far as what's actually taking place. Thank you all for joining us. I'm Serge Berger from thesteadytrader.com. This is our Set the Market morning call. If you've never been here before, we're going to spend the next 10 to 15 minutes going through some of the most important things on my notepad, and hopefully that's going to be helpful for you as well as far as guiding through the markets. Please make sure you subscribe to the channel. That allows you to be updated in real time when we go live. And also, of course, if you could give a thumbs up like on all the videos, including this one here, that would be very nice of you as well. That allows us to be able to continue the show. So, what are we going to talk about? Well, I want to really focus on the rotation in the market, because that's going to get us to really kind of where I want to get to. And then we are obviously here on Thursdays, so it's Ticker Thursdays, which means if you guys have stocks, ETFs, anything you want to look at, let me know, and we will go through it. Okay? So, what I'd like to do, and I actually already made a video about this morning, so I'm going to now do this for you guys here as well. The question that I received from a client, we have something called the mailbag, so there's like emails being sent to us, and I think that question came Tuesday, so a couple of days ago, and the question was, why is the equally weighted S&P 500 quote unquote only up 4 or 5% year over year when we're seeing all this, bullish, when we're having all this bullish breakouts happening all the time. And the reason for that is because we're not really seeing a lot of sectors continuing to run. We're just seeing them break out one after another, but not all at once, right? So that's really what's happening, okay? Let's see here. Jim is saying he has to turn up his speakers. We've actually never heard that before, Jim, so I'm not quite sure. We do webinars and YouTubes all day long, so I'm not quite sure. I'm going to have to presume it's on your end. It's maybe a YouTube thing. Remember, this is a YouTube stream, so maybe it's something that's on YouTube for you. But I think if anyone else has an issue audio-wise, let us know. But I think that's probably a bit more on your end. But obviously, we'll be happy to help in any way we can. Okay? So that's the question, is why is the equal weighted S&P, quote-unquote, only up 5% year a year? That was the question. And so I'd like to show you what's actually taking place underneath. And then we'll go into what's been happening already this week and something we flagged on Monday that could likely happen this week and has happened, which is a major breakout in transports and even energy stocks. So we'll talk about that here shortly. But here is sort of the 1 year look back on sectors. And you can see the technology sector and communication stocks, which is both technology, are leading year to date in performance once again. So they've caught up. That's why the regular S&P 500 is up. But if you look at this a bit more sort of through a 3-month lens, you can see things like healthcare stocks have actually led, right? So the XLV ETF, which we flagged here over the past, 2 months, a lot. In fact, maybe even more than that. So that's working. But it's not all happening at once. That's why the equally weighted S&P remains kind of stuck. It's working higher, but it's not blowing higher like crazy. Also because technology isn't going vertical anymore, right? So the regular S&P 500, by the way, which is really likely, in our view, very, very likely going to be range bound for maybe 5 to 10 years going forward here, it needs technology to have an outsized rally. Otherwise, it mathematically can't go higher, right? Well, it can go higher, but not in any meaningful way, not more than a few percent a year. And so that's the big risk. Now, if you look at this even more closely, and you look at this over the past, let's say, few days, or even let's say the past 1 month, you'll see that energy stocks are starting to creep higher. So this is just on a sector level. We could go deeper and look at this from an industry group perspective, and then you would see some other stuff which I'll highlight to you here in just a minute. But if you look at this just on the past few days, so month to date, which is the first few days of December, you'll see that the energy sector is actually leading up 1.5% here on the month. So it's the market is grinding higher, but it's not happening all at once. It's rotation. So we are in a rotational market, and not so much in a everything goes up all day, every day, massively, right? There's, in fact, even within sort of the Max 7 bubble, there's stocks that look like absolute crap. Or with those large ones, like look at Microsoft, look at Netflix, even quite frankly, Nvidia is kind of stuck, right? So there's definitely a change. It's a rotation. But again, unless technology really leads, the S&P is going to have a very difficult time going much higher. It can go higher, right? But it's going to have a difficult time continue going higher at anywhere near the rate that it has for the past 5 to 10 years. And the equally weighted S&P 500 really needs kind of everything to rise. Otherwise, it can't go higher. So hopefully this is helpful, and that gets us to the next point here right now. Now, one of the first charts that we showed you this week was the chart of the transportation ETF. So this is transport stocks. And if you guys remember, if you were here on Monday or Tuesday or even yesterday, Wednesday, we talked about this and we said that, listen, the transportation stocks, who remembers me talking about this? Anyone? Right? We talked about the transport stocks moving higher. And sure enough, yesterday, the IYT ETF, which represents transportation stocks as an industry group, remember, that's an industry group, it's not a sector, was actually up 2.5% yesterday, right? Within that, you can see something else that we flagged earlier this week, which is airline stocks. They are this week up a few percent already, and we talked about them. It's one of the first things we talked about on Monday morning, right? We talked about those going higher. So hopefully we're able to help you navigate the markets, hopefully profitably, right? Without narratives of things bubbling higher. And so that's what's going on here. And it's really a rotational market. And last but not least on this part, before we look at some other stuff, is really the energy sector, right? We talk about energy. This is actually one of our major themes for probably 5 years for the next 5+ years. We think there's a massive misallocation of capital in the AI space. Not that it can't go well, but people are dramatically over allocating that versus something like energy stocks. Now, remember, the energy sector is kind of a weird one in the sense that utility companies are actually not classified as energy stocks. But to me, that's one of the definitionally, in my own book or mindset at least, that's definitely, utility stocks, definitely energy. So we've had big moves this year in utility stocks. In fact, if you look at the year-to-date they in utility stocks, they came back a little bit over the past couple of days. But you look at utility stocks, actually, they're up 11% on the year, right? And that's utilities. They pay nice dividends too, by the way, right? So we think there's tremendous demand for utilities and, of course, for the energy sector as a whole, right? Not so much necessarily the Exxon Mobils and the Chevrons, which are the largest holdings of the XLE, ironically, but just in general, right? So yeah, that's what's going on there. Let me see. What else can we go through? Let me check one thing, guys. I want to make sure. Okay, if you guys are having sound issues, you know what? Let me just check one thing. It's possible it's picking up the wrong thing for sound. Let me just check. It's a little weird. And then we'll continue. I want to go through Ticker Thursday. I want to go through, and I want to go through Bitcoin as well. So let me just check one thing. If you guys are having sound issues, if it's not just one person, then that's a little weird. So let me have a look. It's possible that it's taking the wrong source. Sometimes it just does that automatically. Huh. Weird. I don't know. It seems we'll have to check it. I don't know. Yeah, some people are saying sound is fine. Some people are saying there's a sound issue. Anyway, we'll figure this out. But so that's on the energy on the energy charts. Hopefully, this is helpful. Okay. Thank you, Christian. I appreciate it. Quickly, before we go into, I want to show you one energy stock that's really looking good, that's breaking out. And then I want to go through Bitcoin quickly as well, which it's possible that it's in a momentum shift to the upside. So we'll talk about that as well. Quickly, I want to just remind everyone that this week's educational series is very much focused on finding extremely overbought and oversold readings in the market. And so if you have ever wondered how you can find extremely overbought and oversold stocks, particularly the oversold ones, and I'm talking about like very, very oversold, right? But also when something's very overbought, so we can get rid of stuff when something's very overbought. We're going to talk about that here today at 1 o'clock Eastern. That's 10 a.m. Pacific time. We'll go through that. We'll teach you exactly what our process is. So this is our weekly educational series. This is where we teach you and people in general how to find extreme overbought and oversold situations in the stock market. So that's what we are going to be talking about at 1 p.m. Eastern, again 10 a.m. Pacific today. Now, two more things, and if you guys have stocks you want to look at, I'll be happy to stick around for those as well. But one stock that I want to talk about is Apache or APA Corp. They've now changed their name. This one has a pretty nice, if you like breakouts, right? This is a pretty clear move. From a breakout perspective, you can see that move taking place at number one. And number two, I do want to quickly talk about Bitcoin, because this one here is in an interesting sort of bottoming pattern. We don't yet have new bullish momentum just yet. In fact, if you look at our, see if I can show this to you here quickly without making this. Yeah. So if you look at our momentum indicator, we don't yet have a new buy signal, but so we're technically still in bearish momentum, but I wouldn't be surprised if momentum changes to the upside pretty soon. And if you guys want to, we can keep you updated on that next week. Benita wants to look at NEE. Let's see what that is. Yeah, so this is a very similar situation to Apache, right? So what we're learning here from this kind of analysis is that it's about the sector, right? If sectors are doing well, we have a pretty good chance of picking a stock within that sector that does well. I will always remind people that it's usually an easier way to make money in markets, or an easier way to navigate, by getting the sectors or groups right rather than the individual stocks within there. So I'm always, as a portfolio manager, I'm always way more concerned and spend way more focus making sure I get the right asset allocation right, meaning the right sectors, groups, asset class, rather than the individual stocks. I can always then buy an individual stock or so if I want to have, sort of an extra alpha generation bet. Yeah, so just please keep that in mind. Let's see here. Next one is Starbucks. And Starbucks. Yeah, I mean, for Starbucks, there's not a whole lot taking place. So the trend is actually currently no longer bullish. I think it's neutral trend right now. I have to check that on the other thing. But maybe on the more near term, let's see. On the more near term, we have we have bullish momentum on Starbucks. It's just not like a great setup here, to be honest with you, but it could, right? So you technically still have bullish momentum based on the signal from the 11th of November. And so, you could possibly start to see a move sort of above, if you will, resistance for that. Next one is ASTS. Let's see what that is. Still bearish momentum on this one. On the short term, James may be able to get bullish momentum soon, but in the near term, momentum is definitely bearish. Still, again, that could change pretty soon. So I would put that on the radar as something to watch. So yeah, so there you go. That's exactly 15 minutes. I hope this was helpful for everybody. We even managed to get in a bunch of Ticker Thursday tickers, so hopefully this has been helpful for you guys. I'll look into this sound issue. I'm not quite sure. It seems a bit weird because a lot of people seem to say everything is good, And then some people say audio is low. So I'm not quite sure what's going on. We've actually never, until today, no one's ever said that audio is low. So I'm not quite sure, but we'll look into it. In the meantime, everyone have a great weekend. We do this show Monday through Thursday. We'll be back here Monday. In about 15 minutes, we'll be over in our trade ops area, which is our members area. We'll do some trades there. And then, as I said, at 1 p.m. Eastern, 10 a.m. Pacific, we'll be going through our extreme overbought and oversold methodology in the markets. So, cool. Thanks, folks. Have a wonderful day, and we'll see you soon.